Welcome to Massive Passive Cash Flow, the podcast that guides professionals to financial prosperity. Join our community and let's start building your wealth. Here's your host, Gary Wilson.
Welcome back to the Massive Passive Cash Flow podcast. I'm Gary Wilson, your host, and I'm glad to have you back on the show. Hey, if you wouldn't mind, if you haven't already done so, is please subscribe to the podcast. It's on 30 different channels, including the one you're listening to right now. So it makes it easy. Just do that. That'd be great. And while you're out there, please visit globalinvestoragent.com. So this is where you and I, real estate investors, can identify what we call investor-friendly agents, or we call them investor agents to be short. You go to the website, you can pick them out. We're in 37 states. We know they know what to do because we train them. They're certified. This is the only place they can be certified. And again, I can't emphasize enough, these guys know how to identify, analyze, and negotiate on and off market deals. This is not your typical agent from the big office down the street. That's not what this is. And if you are an agent and you're wondering what to do, because we know volume's down to 1.89 transactions per year per agent, is click on the learn more button and make this part of your model. I'm telling you, you can't go wrong once you understand how to work with investors. If you don't, it's going to be exercise and frustration. So learn how to do it. Doesn't have to cost you a dime to do that, and you can build out that part of your model. So especially the way the market's going. In any case, hey, without further ado, we got a great guest today. Chad Wittfeldt is on. And Chad, first off, thanks for joining us, man. I appreciate you taking your time to do this.
My pleasure.
Yep. And what we're going to talk about, guys, is not really real estate today, but crypto, because it's actually part of the overall massive passive cash flow model. In the last couple of years, we've been talking more about it, adding it to the program. And so Chad's a great person. We've already spoken to Chad's partner, Nico. So this is maybe like a part two, if you want to call it that, or part B, but more about the mindset today. So, but Chad, if you wouldn't mind, kind of fill us in, like, how did you actually get into this? Because I know most of us came from some other industry where we're doing something else before we get into this.
Yeah, 100%. Yeah. So I actually have quite a diverse experience in real estate as well. We've syndicated multifamily apartments and self-storage. And so really that desire for cash flow is what led me to take crypto at a much, much higher level. So believe it or not, I've actually been in crypto for over 10 years now. I bought my first Bitcoin when it was less than $100, but I didn't really do anything with it, right? Like it just sat there. I wasn't active. I wasn't trading it. I wasn't looking into alternative platforms for DeFi. I wasn't looking into yield farming and mining and all of these components, right? However, fast forward many years down the road, after closing some apartment deals, I really started to become obsessed with that MRR model, monthly recurring revenue. Right, I could do a
Mm-hmm.
deal and it pays me for months on end. Right, and
Yep.
so I took a lot of what I had learned and applied it to mining Ethereum. So I had a pretty large Ethereum mining warehouse. That was multiple seven figures of hardware running around the clock, validating transactions across the Ethereum network. And the cash flow from
Okay.
that investment was better than anything I had ever done in my entire life leading up to it. But that party came to an end, right? You can't mine
Mm-hmm.
Ethereum any longer. And during that time, during that exit, is actually how I got linked in with Nico. We started trading these ICOs and these Bitcoin contracts together. And so
Okay.
that's really what led me here.
Nice. Well, it's funny is there's there's a lot to learn in this whole industry sector, and I encourage everybody listening to learn as much as you possibly can, because we're still in the early adapter phase, but I don't know for how long, because now, if you think about it, a year and a half ago, you know, the term crypto, blockchain, metaverse, all that stuff came up maybe once a month in the news. Then it became weekly in the news. Now it's daily in the news. I mean, it's all over the news. And it's
Yeah.
not all good and it's not all bad. But what's cool about this is it's starting to hit mainstream. So what we're going into is what we call the mass consumption phase. And we're just in the beginning stage of this. You still have time to get in early. So if you think about it, Fidelity Mutual Funds is now in that space. You can buy and sell cryptocurrency on Fidelity. Think about it,
Yep.
that's one of the largest, most massive mutual fund companies on the planet. Banks own coins. Banks want to create their own coins. Banks are doing transaction processing on the blockchain now. Um, So this isn't going anywhere. It's actually, well, it is going somewhere. It's going in everyone's household, everyone's bank at a rapid pace. So this is why you want to pay attention. So in any case, having said that, Chad, take us through a little bit about the mindset, because it's still a little bit of the wild, wild west. You know, we're transitioning. We got a ways to go, and it looks awful tempting. I know people look at the numbers; it's just startling. But you actually have to have a level head, and just like anything, you want to do some research and start
Yeah.
off typically small. But what kind of things you've seen out there, like from your beginning days? I mean, there was probably a lot of rewards and a lot of risk too, you know. So,
Yeah, yeah, for sure. At that time, it's a little bit different because, you could buy a bit for quite a long period of time. You could buy Bitcoin for under $1,000,
hmm
right? And so when you have that price arbitrage and being an early adopter, being very fresh to the market, it allows you to capture a heck of a lot more upside with a lot less financial amount of risk. You are taking more of a uncertainty, but your
hmm
upside, outweighs that, right? And so, for me, I think the biggest thing is exactly what you said, like coming to the industry, coming to the market with a professional mindset and understanding that you should treat it like a business. Don't treat it like Las Vegas, you know? And
yeah,
so that's the biggest component that I've seen play out time and time and time again, especially when you look back, early, or I'm sorry, late, 2021 in November, when we saw all-time highs in crypto, and everyone and
yeah,
their brother was just in a frenzy to get involved because they heard headlines and they heard stories about so and so who, turned $1,000 into 10 million, and he bought his mom a new house and a Ferrari, and people wanted
hmm
that, and so they fueled their emotions with that
hmm
instance in mind. And that's
right,
really where that's the underlying premise that leads people down the wrong path, right? When
yeah,
you come to the market with more emotion than logic, you're
hmm
ultimately going to get ended up and led to one of two places. One is going to be buying the hype, right?
hmm
Or two, and God forbid this happens to you, getting scammed, right? And
yeah,
it's a very predatorial market because it's new, it's the wild, wild west. And again, there's a lot of emotions that goes into the marketplace. And so people will take advantage of that.
yeah, yeah. So what does that look like? What are some examples um, of the scams? I guess they can mimic or copy legitimate programs and offerings, but what's like one of the most common things that you see out there, have seen out there, that people can know what to look out for.
Yeah, that one's definitely going to be super common. They can fake contract addresses and make a clone of a token, make it look legit. You got honeypots. Honeypots are where a project, a cryptocurrency you can buy into, but you can't sell it. All right, that's a honeypot. You got rug pulls.
Mhm,
Rug pulls are when the liquidity of the market is not locked, and it just gets or the liquidity of that token gets just ripped out of the market by the dev
mhm,
team. Right. So that's another one. I think between all of those, the really the most common one I see is typically going to be around the people who are looking to make passive income in crypto, right? And this is really where a scammer, will start to poise as somebody and try to convince you to send them crypto so that they can trade it or grow it on your behalf. They want to custodian your crypto on your behalf, and they promise
mhm.
you these returns, right? Every single time, if somebody reaches out to you and they're asking to trade your crypto for you on your behalf, or they want to take you over and have a conversation on WhatsApp, every single time it's a scam. Every
Okay.
single time, right?
Yeah.
So that one's super super common as well. um and and yeah, then you have all the others, like, if you look back a couple years, you had BitConnect, you had USI Tech,
Mhm.
These were pretty large scale scams, multi million, if not billions of dollars. And these platforms, you go and you sign up and you have a beautiful website and you log into this office portal and you send your crypto to that website, and the dashboard shows you visually how much money they're returning you. Now you might be
Mm-hmm.
able to make a withdrawal or two, but eventually they run out of chairs and the music stops, and it ends up just playing out as a Ponzi scheme. And the biggest two of those are definitely going to be BitConnect, USI Tech, and some could even argue that that's how FTX was playing out as well with Sam Bankman-Fried. So
Yeah. Hmm. Yeah, that was a big shocker for everybody. I mean, they
it was
were,
huge.
and theirs was an exchange site, so you can trade your
Exactly.
buy coins and sell coins and all that. And I don't know all the story behind it, but it was pretty huge, big blow to the industry,
Yeah.
to the consumers.
Yeah. Yeah.
So
100%. And the reality is, like, for us, the only way to be truly self-sovereign in crypto for the long haul is by being your own custodian. The more
okay,
power and the more control you give over your digital assets to other people, the more likely you are to end up into a world of hurt.
yeah. So one of the big things to look for then is with you have to give up your coin or send your coin to another entity and and give them control over your coin. So now having said that, what are things that people should look for that could be good legitimate opportunities? I mean, I guess one of the characteristics is you keep your coin in your wallet, that
Mhm.
kind of thing. Is there an example of that or a couple examples you can think of that people that have been out there?
Yeah, absolutely. I think it really kind of comes down to what your strategy is to begin with, right? Like, there's nothing wrong with being somebody who wants to dollar cost average into a market, right? Let's say you're working 50 hours a week. You got the family at home, you got a couple of real estate investments, whatever. And you just don't, quite simply, don't want to put time and effort into learning how to actively trade in a market, right? The best
Hmm.
strategy in that scenario would be to be dollar cost averaging, especially in a market correction like right now. And for those of
Hmm.
those who don't know what dollar cost averaging is, it's allocating your buying your entry price over a specific period of time to smooth the price volatility and give you a more linear entry into the market, right?
Hmm.
And that can be a fantastic strategy for a lot of people, right? But where you could go wrong is by, let's say you amass a multiple 6 or 7 figure portfolio doing that, and instead of keeping it locked away in your wallet that you own those keys, you own that wallet, you decide to pledge
Hmm.
it to some staking platform that's promising you 8% a month in staking returns on that crypto,
Hmm.
right? Well, you just opened yourself up to a new layer of risk that you didn't have when you held that in a cold storage wallet on your own custodian. It's just an example.
Yeah.
But yeah, it's really just all about having strategy and then properly allocating the risk alongside of that, right? Like, the more risk you're taking, the further you might want to consider reducing your position, right? And
Okay.
this is a whole nother conversation, but I mean, you look back to when Bitcoin was 65K, you can literally go and find posts on Reddit and YouTube and videos and all these things. There's guys out there that took a second mortgage on their house, the roof they keep over their wife and their kids. They took a
Hmm.
second mortgage on their house to go buy Bitcoin at the top of the market at 65K, right?
Wow.
Imagine how that, so, like, having proper risk, having proper control, not treating it like a gambling, opportunity, it's going to take you a long way.
Right. So when you first got into the business again, you were mining for Ethereum, and then were did you get into some of the other people's projects first? Or, I mean, particularly ones where you kept control of your coin was in your wallet. what you were
Yeah.
learning from them? Is that the next step? And what does that look like, and what can people look for there?
Yeah. So when it comes to auditing a new upcoming cryptocurrency project, the really important thing is to understanding the life cycle of these launches of these new tokens, right? Because the overwhelming majority of these projects will not make it to Coinbase. They will not make it to crypto.com. They're not going to become
Mhm.
the next, Axie Infinity, right? And that's just simply because people don't quite understand how many of these projects launch on a daily, a weekly, and a monthly basis. There's a lot of them,
Mhm.
and they all can't make it, right? And so your exit strategy in that instance is equally as important as your entry strategy,
Okay.
right? And so when you're looking at these launches, you're looking to find what is going to have um, a successful stage one. And I wish I could share this image with you guys, but um,
I
successful.
could actually make a co-host, and I know that. So everybody listening, we do record these audio visual. If you ever want to see the actual visual part, you can go to our YouTube channel. But otherwise, we'll have to narrate for you if you're just in your car
Yeah,
listening.
yeah,
So,
yeah. Let me
you
pull
know,
this image up. Yeah,
okay.
and so yeah, it's really just all about understanding the marketplace the dynamic that you're getting involved in. Because like I said, a lot of people get into this game for something that it's really not.
Hmm.
And I think not having the easiest way to fail at it is not having a sound, proven strategy, risk management, psychological management, because like you're just going to get eaten up, spit out alive, which we've seen time and time
Yeah.
again. You know.
Hi, I just wanted to take a moment to say thank you for participating in the Massive Passive Cash Flow podcast. Also, wanted to let you know that the book Global Investor Agent is officially out in print and in Kindle on Amazon. You can get it by clicking on the link right here. If you are an agent, definitely grab yourself a copy. This book, guys, was not just written by me. I also included 8 other investor agents from around the country. And I didn't just handpick them. I literally opened it up to the entire audience, and it was first come, first serve. So you're going to get feedback from brand new agents all the way up to top 25 team leaders. Some on my team, some are not on my team, with valuable insight and instructions and guidance and actual checklist to follow to not just survive but thrive in this market. I know you're looking for that advantage, and this is it. By the way, if you are an investor, grab a copy for your agent. And for everybody, all proceeds, all profits from the sale of the book, Kindle and print, all go to the Healing House Foundation. 100%. Thank you for doing that too, guys. Let's get back to the show.
Let's see, here it
Well,
is.
no, when that translated, what that comes down to is just like anything you're investing in, whether it's a stock on the stock market or a coin that's coming out, is you have goals set in mind. If you're going to put in, determine you're going to put in 100 and just put in 100.
Yeah,
And if it goes to 200, you're going to get out of 200, regardless of what else it might do. But also put a downside stop in there. So if it drops by 5%, you get out.
exactly.
You don't keep waiting and hoping and wishing. So that's where the discipline comes in. So we could come back to that in a minute. Let's go ahead and look at this here that you
Yeah.
have, Chad.
Yeah. So this
Mhm.
is what they say the crypto J curve is. And one really
Mhm.
important component about this is not every token's going to have a successful stage three. Like I said, a lot of them are going to fall out, a lot of them are going to fail. And that's just the nature of the beast. And understanding that's the marketplace that you're walking into. The reason why that is because the developers behind these tokens and behind these programs, they have to fulfill on their promises. They have to actually
Mhm.
go build the thing and put it into the marketplace that they're promising. Right. And so over here in stage one, when these projects first go live, these developers are saying, hey, we're going to be the next NFT metaverse. We're going to be the next play to earn game. Right. We're going to be this next crypto gambling site. We're going to be this next peer to peer lending platform, so on and so forth. So in this phase, all of those components aren't alive. They're not built. They're not proven. They're just saying what they're going to do. And in stage two,
Mhm.
that's when they have to fulfill. And oftentimes they don't. And that's simply
Okay.
because it's hard. It's hard work to go out and actually build those things. And so with knowing that, that being the nature of the beast, however, what goes into a successful launch is very, very linear, right? It's all based on speculation and hype, right? And so being able to go into that project, audit their marketing plan, audit their community, audit their white paper, audit how they're going to run their tokenomics, how they're going to launch their ICO. We take all that information and say, hey, we think this is going to be a successful launch, right? Inside stage one. From there, we're able to use two different mechanisms to get involved before that project goes live. And that's private sales and pre-sales. And these are just simple allocations into a token before it goes live onto the blockchain. And essentially what that allows us to do is take advantage of the stage one volatility, make an exit, and move on to the next one, right?
Okay.
We also do implement a strategy, an exit strategy called RIP-FT. RIP-FT stands for Recoup Investment and Profit, Leave in Free Tokens. And so just an arbitrary example of that, let's say you put $200 into an ICO that does a 10x multiplier, which I know it sounds crazy, but this happens all the time in this industry, right? So you have your 2K unrealized.
Okay.
Now 200 of that is your principal. A 10% RIP-FT would be pulling the 1,800 back into your MetaMask account, pulling it back into your wallet, closing out that profit, leaving the 10% in to ride risk-free through stage two, and essentially systematically acquiring and accumulating more and more and more new crypto projects to try and put yourself in the path of progress for the next Doge, for the next Axie, for the next Shiba, right? Without taking all of the risks that most people do down here in stage two.
Okay.
So that's really that in
Okay.
a nutshell.
And then yeah. All right. Well, that helps a lot. So but back to what we were discussing when we were first bringing that slide up, the graphic is I know one of the terms that you and Nico use, or one of the phrases is you can't be too greedy and you can't be fearful. Greed and
Yeah.
fear will be some of the biggest risks to any kind of any investing. So are there ways that regular investors can implement? How can they put in? If they set their goal, they know they're going to put in so much. They're going to put a limit. So if it goes up to that limit, they're going to get out when they hit that limit. But if on the upside, if it goes down, they're going to get out if it goes, a certain percentage down. And that's if you're intending, if you're playing long. In other words, you think it's going to go up, then you play that strategy. If it's going down, it's a different strategy. But can you talk about that a little bit, about the two different strategies of, your you're kind of betting the market's going to go up, or you're betting the market's going to go down, and what strategy do you use for those two approaches there?
Yeah, for sure. It's really, it's not necessarily the biggest component to playing that strategy properly is going to be having tight ties on your risk management, right? It's like a muscle. And the more you use that muscle, the easier it is to use it. And an example of that, like you eventually start to train your brain and trust your judgment. And if you lead yourself, and you lead yourself over and over and over again to not trust your judgment, you're not going to listen to it, So
Yeah.
And oftentimes the hardest part of, the reason why people have such a hard time trusting their judgment is without risk management is because they have too much at risk. And that's where those psychological emotions happen, primarily on the way down. Like, let's say you over risk, you put too much money into something, it goes down 10%, and that's like all the money you have. Your emotional intelligence to manage that is going to be elevated, because it's too much money for you to lose. Right. So only
Right.
risking what you can afford to lose is super important. So there's that component. And then, number two, trusting your strategy, trusting your process, right? Because if I can do something 100 times over, and I know that 80% of the time it's going to result in X, the 20% that it doesn't, the 20% of times it results in Y, they're not that big of a deal, right? Because I understand the data, I understand my process, I understand my strategy. It's going to get the result over time, right? And so you have that level of patience that you build in faith and confidence, right? And to be completely frank, like, I just think the overwhelming majority of people who even look at crypto in the first place, they don't have the slightest indication of a strategy at all. They just kind of do and act and go about things as they please. They don't really have any component to fall back onto. They act out of emotion more than anything. So that makes it extraordinarily challenging.
Yeah, I agree 100%. And what's amazing is so now what you're doing now is I guess on two fronts. One is taking advantage of data that's available and systems that are available to to invest in the market. Could be short term, could be long term, but in either direction, going up or going down. But also, you're able to, because of your experience, you're able to look at some of these ICOs. Brand new token coming out, or maybe it's a coin with its own blockchain. Um, but are those the two areas where you're spending your time on the investing part of this, or is any like what about uh looking for projects that they do have more utility? They have a solid coin. They've got a blockchain that their people are paying the process on, so you get fees there. Um, and maybe they're developing other components. So is that part of your strategy, or is it more the first two? Trading the coin, looking at the trends going up and down, and that's first one. The second one is looking for the actual ICOs and kind of fill us into like the scope of your activities. What are your
Mm-hmm.
percentage ones? How much on trading? How much on ICOs? And how much on looking for good, robust projects to like for the new blockchain or something?
Yeah, great question. So it's the really important thing is you when you're looking at these launches, right? You are looking to see you are looking and hope and wanting to find a project that is going to have long-term success. But that doesn't necessarily
Hmm.
like they can have the best intentions in the world, right? They can have an extraordinarily profound value add to blockchain and crypto as a whole. It's very, very possible, right? But and they might have the best intentions
Hmm.
in the world, but they like I said, they still have to fulfill on those promises. And that, like I said, that can just
Right.
be a challenging thing for some of these projects to do. And so I think and this is like another kind of a pitfall. Like, even if it looks and appears to be like the next life-changing cryptocurrency, a blockchain, based on their value prop or their utility or whatever, we still have a saying, like, we still don't get married to these, you know.
Okay.
And so oftentimes that strategy still, it's really the foundation and the cornerstone of all of this, because that's why leaving in a small percentage to ride through its life cycle after pulling profits out is a very, very net positive thing to do, right? Whereas a lot of other people who might attempt or try this strategy, they could be 10x in profit and they never take any profit off the table. They never realize their profit. And that's simply because they're just so overly bought in to that project that there's no possible
Okay.
way it could not be successful.
Right.
Right. So
Yeah.
it's really twofold. We really rely on that strategy to keep us safe, keep us safe and profitable in the market. That's a large component.
Yeah. So what about um time frames? Like if you have an ICO, or just really any project, um, the time spent in it could be just a matter of hours, it could be days, could be weeks. Have you noticed any patterns there, or is it really just, or is the strategy really just when you do decide to commit to get in, that you're just looking at that day, you're not looking beyond that day, but if it's there, if it has light, if it sticks around for a few days or a week or even month, um, then you might have a more longer term strategy. Is there any logic there at all?
Yeah, for sure. Yeah, it's really it's dynamic, and it really falls on just being perspicacious around the information that you're being given by the marketplace, right? And so it's
Hmm.
twofold. You have your fundamental analysis and you have your technical analysis. Technical analysis is going to be the validation of price arbitrage on the chart, right? Those are what the candlesticks are actually doing. There's a lot that goes. There can be a lot that goes into technical analysis. So understanding your support and your resistance and price volume and trends, right? You do get to use that information to try and future pace and predict what could potentially happen over the next 5 minutes, 45 minutes,
Yeah.
a couple days, etc. Right. The other component to that, like I said, is going to be your fundamental analysis. These are your overall sentiments on what's happening inside of that cryptocurrency project, right? Is that project have good sentiments? Meaning, is the community still very, very excited about the project's launch, right? Are they
Hmm.
saying positive things in their chats? Are they supporting the project? Are they excited about the project? Or are they what people call fudding? Fudding stands for fear, uncertainty, and doubt. Right? That's where the
Hmm.
community starts bad mouthing the project. I'll give you a quick. I'll give you a quick example. I was in a project. I was up about 15x on this ICO, and I was watching it and I was waiting it. And at 15x, you're like, all right, I should definitely start pulling some off the table, right? 15x is a nice move, right? That's not to say we haven't gotten into things that have done over 100x, right? But 15x, you're definitely like, all right, I don't want to get greedy here. So I'm keeping a really, really tight pulse on what's happening with the project. And the lead developer of the project was on a AMA, which stands for Ask Me Anything, right? Which is basically like a live voice chat with their community, going over, what their next plan is for the project. And somebody asked
Hmm.
him a question, and his response was nothing short of rude. It was nothing short of impatient. Because he was asked a simple question that he didn't really have an answer to, and it tested him, and he didn't really like that very much. So he got pretty snippy and crappy with somebody who asked the question live on a call. And really, really quickly, you decide, okay, well, if he's getting upset about that, I'm not going to hold all my eggs and put my faith in him anymore, right? So that led me to
Right.
close a pretty large portion of my position off that table. And sure enough, within the hour, that project pulled down big time, dumped big time, right? So they're extremely, extremely volatile, assets.
Yeah. So let's talk a little bit about what you and Nico are doing now. Um, how can people, you know, f- get a hold of you and maybe learn a little bit, observe a little bit, or participate? What do those opportunities look like, and how can people take advantage of them?
Yeah, for sure. So if it's something you are interested in, I mean, first and foremost, we always, always, always recommend at least having some level of foundational understanding before you go out there and try to find this type of stuff. And that's primarily because once you open Pandora's box, you're going to get bombarded with all the nasty things. scammers, fake projects, rug pulls, honeypots, etc. So it's really important to understand that they're there, and even more important to understand how to protect yourself from them. Right. And so we offer all of that training for free. And you can find us in our free public Facebook group. It's just Crypto Renegades on Facebook. We do a live training in there every single week. And there is a full mini course that's going to teach you exactly how to do that, how to start looking at this market properly with a good mindset, with a strategy, and protecting yourself from all the crap out there. That's always my first recommendation to start.
Okay. So Crypto Renegade on Facebook.
Yeah, it's a group.
And it's a group, okay. And do they have to request to join, or is it just open to the public? And
you'll just have to request to join. And we do that to weed out spammers and scammers. The official name of it is Crypto Renegades, helping you get 2x to 100x gains with ICOs.
Okay. We got, and is it the training, the live, is it like a lunch and learn on just every day of the week, or one day a week, or
just once a week we do a live training? It varies. It varies week by week and time by time.
Oh, gotcha. Okay.
Yeah, but we announce.
But there's other material they can get on there. Exactly. It sounds like.
Yeah.
Perfect. Exactly. Okay. So everybody check that out. Make sure you go to Crypto Renegades on Facebook. Okay, Crypto Renegades group. And full disclosure, I've already met the other partner, Chad's partner, Nico, and had him speak. We did a podcast with him. He spoke to our private mastermind group. And it's nice to be able to talk to real people, and not a fake person.
Yeah.
We've actually seen that. We've actually seen people commandeer other people's identities.
Yep.
And craziest thing, I mean, I'm out there quite a bit, in the world, publicly speaking. And so one of the companies that does some of my legal work has a registered agent, and I'm not going to give the names because I don't want to get calls a stir here, but that particular registered agent's name was used on one of these fictitious projects. I call it fictitious. We'll just call it what it was. It was basically looked like it had the potential to be a scam. I'll just put it that way. It had the potential. Sure. And so I looked up the guy and I said, that's the same exact name, which would be I'm not saying in 8 billion people it's not possible. It's certainly possible, but not very probable based on the name. So I looked the guy up because the picture of the person using the name was not the person that I knew with the same name. And yet a lot of the bio information was exactly the same. His background, his work history, and all that. So I called him on it.
Yeah.
It was the head of public forum, and I said, I'm just concerned. Can you explain why you're using this particular name? And you're saying you're the CEO. And by the way, the person doing it was an actual actor in Hollywood. He was an actor. So the whole thing just looked like, crazy. But and he stood his ground. He didn't back then. He said, well, no, I am the CEO. They've wanted me to be the CEO. And yes, we use stage names. That's what we do in the business too, just like in a lot of other places. So in any case, long story short, I don't think that business is there anymore. That project, somebody said they got bought. I'm not really at this point. I don't care because to me, it's in the past. So this is the kind of stuff you have to look out for, guys. And when you can talk to people who are real on a Zoom call like this, we're doing a podcast, okay, and you can go to their Facebook page and have a live lesson with them. That's the kind of thing you look for, and you learn to do things the right way, because there is a big learning curve. Let's face it. If there's a lot of money to be made, there's probably a learning curve, right? And also means there's money to be lost, and there's a chance of, like Chad said, of scammers and spammers. So do your due diligence. Look for the real people. Look for the opportunities where you maintain control of your coin. Okay. And keep learning. Start small. Start with $100. Don't start with 10,000. Start with 100. Learn how things work and build your way up from there. So in any case, Chad, any final thoughts, words of wisdom, anything that I'm not mentioning or leaving out that we should speak out before we go?
No, I think that's a fantastic way to wrap it up. Like you don't have to go all in and bet the house to get involved and
Right.
learn something. And in fact, in the learning process, you really shouldn't. So
Right.
definitely want to echo that back.
We have a famous saying in our group is learn small and grow big. You
Love
know,
that.
learn on a small scale and grow big. So listen,
Love that.
everybody listening, participating, thank you for doing this. Chad, thank you for doing this too
My
and
pleasure.
taking your time. Tell Nico I said hello. And um, if you could, for the listeners, please leave a review for this on whatever your channel is. If the big one, of course, is Apple, but whichever one you're on, you leave a review on that site, and we appreciate it. That's what makes the podcast world go around. And while you're out there, go to Facebook and check out Crypto Renegade Group. Okay, see if you can join. And before you leave, go to globalinvestoragent.com. And if you're in real estate, like a lot of us are, like Chad said he was too, so with Nico, same with Nico, we're all a lot alike. We're all entrepreneurs.
Yep.
Grab yourself an investor agent, and they know how to, again, help you identify, analyze, and negotiate on and off market deals that, by the way, you can now buy with crypto. So how about that? But take care of yourselves. God bless you, and we will see you in the next Massive Passive Cashflow podcast.
Thanks for listening to this episode of Massive Passive Cash Flow. Be sure to go to realestatewithgarywilson.com to join our community and start building wealth today.